Wonderful good morning, ladies and gentlemen, out of Vancouver, out of the Vancouver Resource Investment Conference. We are back here. We have been this morning already at the Roundup, and now the Roundup, you know, it's the geological exhibition, and I'm very happy here because this is also geology and this is resources. We are at Falco Resources, and they did this morning a sensational resource update. And with me here is Vincent Metcalfe, the CFO, and we want to talk about this. Hey,
Great.
Vincent,
good to see you
well
again.
done, congratulations.
Thank you very much.
What is the resource about? I mean, it's significantly higher.
Yeah, we more than doubled the actual resource, so we're pretty excited. And the important thing now to remember is that this morning we released 6.6 million ounces of global resources, but 81% of those resources are actually indicated resources.
So that's pretty high category.
Absolutely. I mean, we had a lot of historical drilling that we computed. So we used 305 kilometers worth of drilling that was done by Noranda until 1976, and that drilling was done at a 15-meter spacing.
Well, that's very narrow, isn't it?
Very,
I mean, that's
narrow.
more narrow than required by the 43-101, no?
Absolutely.
Because I thought it's 25 in the 43-101.
Yes, it's historical drilling, so we can't use it as proven and probable resources yet, but we're going to be getting there very, very shortly. At least that's the plan.
Yeah.
But essentially, yeah, so we're very confident with our current resource. The confirmation drilling program, as we already discussed last year, helped us really firm up all those higher grade zones and the low grade envelopes. But essentially, right now we're in a position where we're going to be coming out with the new preliminary economic assessment in April, or at least we're saying the second quarter. We're hoping it's going to be in April. It might be a bit later, but I'd say second quarter definitely. So that's going to be the other major milestone. And following that, we're going to do a lot of work this year, and we foresee a feasibility in the first half of 2017. So moving very, very quickly. We have the right team behind us. We have the same, our president is the one who built Canadian Malartic for Cisco. So Luc Lessard, I mean, this for him, it's one of his pet
babies.
projects. Exactly. So he wants to see this project go through, and it's definitely something that he's very, very interested in developing.
Fantastic. I want to ask you something. I'm not sure if you maybe can answer it, but I read this morning with your news release, 65 Canadian dollars was the cutoff grade.
Yep.
I think normally you do like gold equivalent grades.
Yes.
Now you have done $65. How does this come from? What's behind
we're
that?
dealing with obviously different metals. So it's not only a precious metals deposit.
Exactly.
It's actually we have 4 different metals. So gold, silver, but we also have copper and zinc. So it's for polymetallic mines. Typically, you would use the NSR cutoff versus just a gold cutoff. But essentially, we lowered the cutoff from $80 to $65. We've done a lot of work on the engineering side over the past couple of months, and we believe that we'll be close to $65 a ton in terms of the per ton cost, but obviously that will be firmed up within the PEA.
Of course.
And that obviously it's definitely a good step that we attained today, and we're pretty happy with that.
Great. What are the underlyings for the PEA? I would say, is it gold like today, 1100?
Yep.
Or so you're doing it today prices?
Yeah. Well, in the current resource, what we did is we used a 1-year trailing average. So we didn't get the full benefit of the current FX rate, but essentially, if you look at it in Canadian dollars, we're using 1485 gold. So we're still $100 an ounce away.
No, that's fantastic. So that's pretty conservative, and well, I think you have calculated that very well, and we are looking forward then to the PEA and feasibility and all those things.
Yeah, well, I mean, we have to go through the de-risking phase right now. We're only trading at $3 an ounce, which is mind-boggling when you think about it.
Yeah.
Because our project is, when you have to remember, it's a project that's in the middle of the Abitibi. You're next to a town. You have all the suppliers that we need to build.
Yeah.
We have the hydro power. We're next to the highway. I mean, it's definitely something that's going to be a lot easier to build than some of these remote.
Fly in, fly out, whatever.
Exactly. And the main thing is right now is that this is going to be a very, very mechanized operation. So it's going to be very efficient. It's got the right scale, a lot of production. So we foresee a big amount of ounces per year. So it's definitely something that could interest the majors.
Yeah, and that would be the next mine for the future then.
Yes, absolutely. But we want to make sure we build it and we actually use this as the next big Canadian mine. So
super, perfect. And also what we should not forget before we end here, you have the money in the bank and you have big partners behind.
Absolutely.
So you are not running out of money. There's no risk even in this market.
Nope.
Because after this results, I mean...
Yeah. We did a small financing just at the end of the year for flow through. Right now we have about $5.5 million dollars in the bank, and the drills are pretty much stopped at the moment. We're going to be, as I said, we worked on the resource. Now we're going to be coming out also with the PEA. So until then, we're probably going to take it easier on the drilling, and we already have 6.6 million ounces. So
what do you need more? Fantastic. Vincent, thank you very much, and really again congratulations for that. Well done.
Thank you very much.
I'm very happy, as I'm always a shareholder. So great job. And I think the stock price is up 20%, right?
Absolutely.
Great. Thank you very much.
Thank you very much.
Ladies and gentlemen, that was Vincent Metcalfe. You heard it from Falco Resources. 6.6 million ounces resource, up from 2.8. I mean, that's outstanding. It's over 120, 30% higher than they had the last one. And $65 is the cutoff grade, Canadian dollars. And this seems to me very realistic. Now they're working on the PEA and the feasibilities coming up. And we look forward on that. And that's probably Canada's next mine. So stay tuned, check out the company. Thanks and bye-bye from Vancouver.